Cattle markets in 2025 are just unbelievable, and that has been the discussion each and every day, whether it's down at the local livestock yards, at the kitchen table, or here at the American Angus Association's annual convention. And discussing more on the cattle markets this week, and with us here today is Randy Blach with CattleFax. And Randy, how is it being down here in Kansas City this week?
Oh, it's great. It's good. Always good to be with producers and get to hear what's going on in their various regions of the country and how they're feeling about things. So this is no exception. This is a great gathering, and looking forward to visiting with everybody through the next few days.
Well, I'm glad I grabbed you when I did up in the trade show, because I'm sure there's going to be folks grabbing you and wanting to pick your brain on things. But a lot going on in the markets, especially a lot of focus on the markets the last 2 weeks from folks outside of the cattle industry. Yeah. But let's rewind a little bit. Let's look back on 2025. We're close to wrapping up the year. Of course, at the cattle convention that was held back in February, the CattleFax Outlook is always one of the top attended events. What were some of the things that you highlighted back in February of 2025 at the start of the year that looked towards the future? What were some of those things that changed and surprised you along the way?
Well, the way I'd answer that is I'd remind everybody that the message really hasn't changed. We knew 2025 was going to be a very strong year. We knew supplies were going to be tight. We're going into the phase of the cattle cycle where 2025 and 2026 would likely see about as high as the markets would get in that time period. Even though expansion is slow, and it was slow in January, it's still slow today. We're not seeing a real pickup in the number of heifers that are being held back. So that's a little bit slower than we anticipated with the profitability we have. But all in all, I would say really things are on schedule, with the exception of we did have some surprises with the Mexican border. The market certainly wasn't anticipating we'd go through months of the Mexican border being closed. That's had a major impact on supplies of fed cattle throughout the course of the year, availability of feeder cattle, and we also, with the increase in tariffs on Brazil, moving those tariff levels to 76.4%, that all but pretty well shut off the flow of imported lean beef from Brazil. So both of those had a significant impact, and they both went into play within 24 hours of each other. So the market got a little extra juice in July out of both those announcements.
And when you look at that too, what was the dollar amount, the impact that had?
Well, I think if you go back and you look at the fundamental impact of those things, you know, depending on how you want to look at it, you'd look at it and say $15 to $20 a hundred impact on the Mexican situation, where you didn't have those cattle coming in, and we were already in a very tight supply situation. So it moves the needle, leverage shifts more than it normally would. And with the Brazilian situation, you're talking about nearly $10 a hundred. So, I mean, we expected that we could see a market move that we could move another $25 or $30, and honestly, that's exactly what happened in here from July through the middle of October. That's the rally that we saw put into the futures markets as they were looking down the road, and they were doing their job to price in that tighter supply.
Now, so many producers, myself included in the cow-calf camp, we're enjoying these prices.
Absolutely.
We are taking advantage of them, and I think we need to enjoy them and relish it, and just take a moment to soak it all in before we start looking to next year. But so many people have been asking, how can the feeder make money at these prices? How are they going to make this work? What is your response when you're talking to someone about just how complex these markets are and how the supply has been impacting that, but as you just mentioned, two other geopolitical issues impacting that too? How can we all stay profitable in the business? And have we reached the high, I guess, as a part of that too?
Well, I think as you look at this, first of all, I'd just say we don't need to apologize for these high prices. I mean, my family's been in this business for well over 100 years. So many of your listeners have been into business for decades and decades and centuries, and we've never enjoyed a run like this. We've never enjoyed this kind of profitability across the industry. And again, most of that has come based on the growth in beef demand. So we have to remember what's feeding this. It's been producing a much higher quality product that is driving the growth in beef demand. Beef demand's at a 40-year high. What that means to each and every one of you as producers out there is, had demand needle not moved where it has to today, cattle would be, if we had the same demand that we had in 1998, cattle would be selling $1,000 lower than they are today. 1,000. That's a big number. So hopefully that gives everybody a perspective of what we're talking about from demand growth, and obviously that's what's driving profitability. We've had some of these other outside factors that have come in that have obviously juiced the market up some in here, but these things will settle out. I mean, we've had other times in history we've had these kind of outside events that will rock the boat, but eventually those policy decisions will move back to a more normal baseline, and they won't be, the markets won't be so volatile.
Yep.
And right now that's been a big deal.
We've been told not to judge a book by its cover. The same could be said for your cattle. With more black cattle on the market today, wouldn't it be great to capture the extra value you've added to your herd? Angus Link makes cattle stand out. Enrolling in Angus Verified is an objective, reliable way to describe the genetic potential for your cattle, and it signals to buyers yours are different than the rest. The Genetic Merit Scorecard draws on the industry's largest database to evaluate calf genetics and predict performance potential from weaning to the packing plan with real-world data. Claim your competitive edge with Angus Verified and the Genetic Merit Scorecard. 2 programs under one Angus Link.
So obviously last week there was a large focus on the conversation about quadrupling imports of beef from Argentina, and that set off a whole course of conversations and posts, but regardless of that, the markets reacted negatively on the board. We saw expanded trading limits. What is the psychology of the futures board? Our audience, mainly cow-calf producers out there, a lot of them, you know what, we really don't want to pay attention to that board. We want to see what the cash prices are. We want to know what the local markets are doing. But the psychology of that, of the market participants, what is it? Why is it so reactionary here in 2025?
Well, I think there's a lot of things. There was a lot of conversation around the increase in Argentinian imports. Quite honestly, that's not a big deal. The Argentinian imports, if we'd quantify the impact of the increase in imports there, we're talking about $1.50, 100. So it wasn't a big deal, but normally when you start seeing all of the conversation around the policy decisions that excited the market from July and moved them, that really helped drive the market higher in here in August, September, and on into the month of October. As we look at some of those decisions that were made back in July maybe changing here over the course of the next 30 to 60 days, whenever they may change, the market has to go out, and its job is to look down the road and say, hey, what's this going to potentially do to supply? So that's what we've seen in here in the last couple of weeks, and we've had record participation in funds in these markets. So part of what was driving the market higher in here over the course of the last 12 months has been record long participation on feeder cattle open interest and in live cattle open interest. Those funds don't like uncertainty. And when we get all this uncertainty bubbling up, they get out. And that's what you've seen happen in here over the last 10 days. They're getting out.
And when we look ahead and look back as well, what should we learn from 2025? Last week's comments, everything, push that to the side. What should we learn in the cattle industry from this year to help ourselves become better producers in the countryside?
Well, I think we just have to go back to our basic blocking and tackling. I would remind you all that have been followers of CattleFax over the last several years, and thank you all that are followers and subscribers to our information. And again, I would just say this has not been a surprise. The run that we've had in this market from a timing standpoint has been spot on cyclically. This is right what we would have anticipated, that the market would be moving in to make cycle highs in 2025 or 2026. The low in the supply side should be in 2026. I think that's more certain as we look forward here. The things that I would say is these markets are more predictable. We get these things, outside things that can have an impact, but the big picture things are really pretty predictable in this market if we just stick to our P's and Q's. So again, the market's going to stay good here for the next few years, but it's not going to be as good as it's been the last several months. I mean, that was likely about as high as we're going to see, but remember that happened because of some of the policy decisions that were made. So I would remind you all that this is not the first time we've seen these things happen. It happened in 2003, in 1986 we had the dairy termination program. There's been times like this when policy decisions have negatively impacted us, and other times their policy decisions have positively impacted us. So again, this will settle. This will settle, and these markets will settle down in here sooner as opposed to later.
Now, obviously, we're focused on what the market's doing and what calves are bringing in the ring right now too. But we also need those mama cows, and we know that herd rebuilding. In pockets of the nation, it might be happening depending on what the weather's like. But the prices for these cows right now, this fall, I know we got a lot of time before the big sales for these bred cows start. Is it attainable to try to buy cows this year? What are you tracking there, and looking into 2026? How can folks start to maybe trying to rebuild? Obviously, these prices are historic for calves. That's also going to impact the prices for these females too.
Well, I think if you go back and you look at the long-term ratios, Lane, between the value of a calf and the value of a bred cow, it's really one of the smallest ratios that we've seen. We're looking at it today that you're looking at 2 to 2.5 calves to pay for a bred cow. Historically, at this stage of the cycle, that number is a lot bigger than that. So again, they're not that overpriced if we're talking about bred cows, and I'm not sure that market's really established yet, but if we call them 4,500, would that be close in your area, somewhere in that range? We got calves that are bringing $2,100 or $2,200. That ratio is not that far out of line. So, I mean, we got a little bit of time. Things got to settle out a little bit here, but you know, beef cow slaughter's down 30% since 2022. So the industry has clearly got the signal to keep these cows as long as we can in our herd, and they're doing that. And the part of it we haven't seen really kick in a big way is heifer retention. I think we'll see a little more heifer retention as we go into this next 12-month time period.
How about inputs? Are you tracking anything on the input realm, whether it's feed costs, production costs, equipment costs? I'm thinking of soybeans, a big soybean deal announced this week. What happens if a corn deal gets announced? How is that? Could that maybe impact it too, but also just the cost of operating?
Well, obviously we've had kind of a continuous increase in cost of production here over the last decade. That's been pretty common. You know, our input costs have gotten higher. Our equipment prices certainly haven't gotten any cheaper any time over the last several years, and they continue to climb. We've gotten to a spot in here more recently that we've got some bigger surpluses in hay, bigger surpluses in grain prices, in grain supplies. So those prices have been a little more in check. But again, the cycles in those markets would tell you that you shouldn't expect that they're going to stay down at these levels for a prolonged period of time. So I would say we should anticipate that we're going to get higher production costs as we go forward. We just happen to be in a situation now that it's unmatched, that the price of the cattle that we're selling versus our production costs, we've got the best margins that we've seen any time by far in the history of the industry, and that would be true for every industry segment. That's not just for cow-calf producers, but this is one of those years that cow-calf producers will have record profits, stocker operators will, and finished feed yards. So don't get that very often where all of them are doing that well. And again, that'll change. Market will test us all, but it's certainly been nice to see people rewarded for their hard work and efforts.
Now, I know you're not a meteorologist. Matt Makins is a pretty good meteorologist.
Yes.
I always enjoy my chats with him, too. Are we still set up for a La Nina weather pattern? Is that his forecast? And if it does happen, how is that going to impact that weather up, especially the northern tier states and the Midwest route-wise?
Well, I'm not a meteorologist, but I do talk to Matt often. And I think where we are is, as we go into 2026, we're likely looking at a weather pattern pretty similar to what we had in 2025. It's not a strong La Nina and it's not a strong El Nino. We're just kind of walking that line between them, and we can go a little bit either way, but that's basically where we are. So I would say plan on a weather pattern that's pretty similar in 26 with what we had in 2025.
Well, we were cold up in Montana the first few weeks of 2025, but I know you got to go do a sound check and get ready to address the attendees here at the Angus Convention in Kansas City. What's the last message you have for producers out there on the cow-calf end of things here today?
Well, I would just say, think about where our industry has moved over the last 40 years. From 1980 to 1998, we went through a 50% loss in beef demand. 50% loss in beef demand, it was a train wreck. From 1998 to 2025, we've gone through a 40-year peak in demand. Why? It's quality. It's quality and consistency of the product that we produce. And if I could share with you what I see when I go through all of this data, daily, weekly, monthly, demand is really key. And if we continue to put the high quality product in front of our consumers day in and day out that they can trust when they feed their families, we've got a very bright future in this industry. And it really feels good to be able to say that, because it's true and it's happening. So congratulations each and every one of you for the efforts you've done to help move this beef industry needle in the positive direction, and we're all benefiting from it. So great job.
Well, again, Randy, thanks for joining us here today, and we'll look forward to also your outlook coming up at CattleCon 26. Where are we this year? Nashville.
We're in Nashville. That'll be a fun one down there. So thank you. Thanks for having me, and keep up the great work out there of keeping people informed.
Well, we appreciate you being with us here today, and thanks for joining us wherever you're watching or listening to our conversation today with CattleFax's Randy Blach. Again, sign up for all of their news, studies, and information. You can get that right into your inbox every single Friday afternoon, or in the mail if you prefer snail mail as well. But again, more of our conversations can be found right here on these platforms from Angus Convention 2026 here in Kansas City.